All right, stock market. We're going to close it up here in a few minutes. We'll take a look ahead of the closing bell. This is a big week for investors. See a mixed picture. The NASDAQ down. Dow and the S&P are up. We have a Fed decision coming Wednesday. Rate cuts expected. How big that cut might be is up in the air. Our next guest says the Fed must cut rates by at least a half a point. Greg Ip is chief economics commentator at the Wall Street Journal. Welcome back, Greg. So that's the debate whether they go by a quarter point or a half a point, and you say go big or go home, I suppose. Why a half a point?
So I don't know what they're going to do. I don't think anybody does right now, except maybe them. But I think if you actually look at the level of rates today, they look too high. Their current target is a little over 5.25%. And they pushed it there a year ago because they thought they were going to have a really severe inflation problem, with inflation stuck maybe above 3%. And honestly, they were willing to cause a recession to prevent that from happening. But if you look at inflation today, I mean, those risks have receded dramatically. If you look at underlying inflation, it's around 2.7%. It's not quite to the Fed's target of 2%, but a lot of forward-looking indicators suggest that we will be very close to 2% a year from now.
Yep.
So there's just no justification for having rates that high any longer. So I say, time to start getting them back to a normal level. They've kind of dragged their feet to this point. I think they need to get on side with where the economy is right now. And even if they go half a point, Connell, that means their target would still be 4.75, which would still be very high.
Now, there's betting on all of this, or investors kind of in the Fed funds futures markets. It's gone back and forth. Last we looked this afternoon, it's about 60-40 in favor of what you're saying, which would be a half a point cut. So it seems like a lot of people are either betting on this or think this might happen, but it's not clear cut by any means. The question, I guess, is what the bigger risk, and you write about this, is for the Federal Reserve, and they look at this. Do you cut too much or do you not cut enough? I know you said inflation probably keeps falling, but we have another quote from your piece in the Journal where you go into it and say, well, inflation could also prove stickier or even edge higher, especially if oil rebounds or tariffs are raised. If that happens, the response should be straightforward. Don't cut again. Rates would still be relatively high, as you were saying. Pick up on that.
Sure. Look, no decision the Fed makes is risk-free. You're a central bank. You operate in a world of uncertainty. You don't know what's going to happen in the coming year. You basically look at the probabilities, the risks around those probabilities, and you try and make the best possible decision you can. And then you think about, well, what are we going to do if we're wrong? And that's how I think about it, Connell. So let's say they do, as I suggest, and they cut by half a point, and they get a couple of really firm inflation readings in the next few months. I don't think that will happen, but it's not out of the question. Well, then they say, we're just going to stay here with this rate. As I said a minute ago, 5.75 is still very high, and it still continues to put downward pressure on the economy. And it means that over the course of the next year or two, it should keep the economy, in a modest enough condition that the inflation rate will continue to drop down. But then there's the other side of the coin. What if they only go a quarter, which is what some people would suggest, but then we get a weak employment report or 2 weak employment reports? In my judgment, that's a situation you really don't want to be in. Because as Chair Powell said just a few weeks ago, the labor market has cooled and they don't want it to cool any further. We have the unemployment rate already on the rise, job growth looking pretty slow.
Right.
Anything weaker than this point, it starts to feel kind of like a recession. And if you've only gone a quarter point by then, you're really behind the curve.
Thanks so much for watching. Just go to joinnn.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.